to see a screen well?
Yeah, it's clear.
Okay, fine. Let's start to analyze this EURUSD so that we can know what to do in the market this day. Either we can have a buying opportunity or selling opportunity, or we can chill just looking at a market reaction. Okay?
Yes, yes.
Let's start from the market time frame so as to know the general buyers of the market or the general direction of the market as usual. When we come to the monthly time frame, you can see first of all, the market just tried to change the character or to create a shift at this point as you can see. You see, market again was this shift right here, and then needing to take any formation or any liquidity, then the market became directly trending down, and later on the market became to perform another shift, indicating that now the market is ready to come at this liquidity area, and this is what we call a cycle type 2. Think of together. No, hello guys.
Yeah, bro. Go on. Understood.
We are together. We are together.
Okay. After the market performing a shift right here, it means that all of our eyes now are turning into this formation, this inside formation that the market offer the us right here. And within this inside formation, the market also gave us another formation that is this one. Even though it seems like it is already consumed, but we won't ignore it. The market will give us anything, any reaction will happen right here. So now we know our general direction is just to come at this liquidity area, as we can see. And in supporting our buyers or our idea, also the market come to give us another shift right here that indicates that now the market is ready to come at this liquidity area. I think we are together. After getting that shift, let me try to cut this chart. Let me try to cut, sorry. Yeah, after this shift, we saw that there is no any inside information here. So it means that in case we want to trade this shift until we see what? Until we see the market is creating another formation here, then we will use that formation to buy up to this liquidity, up to this liquidity area. Once you play it, what market will do? Market didn't close about this weekly injection, so we're still waiting for the confirmation of the market. Again, the market didn't close it. Then after that, we may see here the market come and confirming a bullish structure. As you can see, the market here come to close in this what? In this weekly rejection of the off the side here. So now we are confident to say that we are about to go where? We are about to go to this liquidity area. But as we see before this shifting, the market need to consume all liquidity because there is this thing that we call it as an imbalance of the G. So there is a possibility of the market also to come here and to take either 50% of the G or to take this order block as you see here. So it doesn't mean that if the market offered us any buying opportunity, we will leave it. No, yes, we will take it, but we want to come to exit here. We will come to exit at the last high, that is this one, because the market has a lot of liquidity that are not yet consumed here below. So let's observe what the market offered us or do. It took a buying entry right here, then it came and it didn't close above this week rejection. If it didn't close above that week rejection, it means that the market now is about to turn and come to take this imbalance or order block. Let us put Fibonacci retracement so as to know the percentage of this order, the percentage of this FVG, and to know the exact frequency where the market will take that FVG. Let our market came and they consume 50% of this FVG. Then after that, it reframed its bullish movement up to that point. So, let me cancel this. So here it means that we after the market come and confirming another bullish trend here, we have to find any buying opportunity that will make us or that will elect us up to this liquidity area that are found in this zone. Here we say the market reached the turning point here. So any shift in a later time frame, it will lead us to this liquidity area here down. I think we'll see well. And for those who are yet studying the masterclass, I think they will know that this is which type of entry they will know. So we will wait the market to come in this liquidity area and to observe any formation or any reaction of the market that will lead us to this liquidity area there up. Are we together?
We are together. We are together.
Okay. As you see, the distance from this point up to this point is very far. If there is any time frame that is out of our coordination, that will give us the formation that oppose our idea, it means that there is a very high possibility of the market to follow that road for that time frame. Example, when you go from the monthly time frame according to time frame coordination, we're actually going to the time frame to see the reaction. But mid of daily and the monthly time frame have a weekly time frame. If weekly time frame didn't allow us to go to the monthly area of liquidity, it means that the market won't come to the monthly area of liquidity. So before going to look what the time frame is telling us, let us firstly go to look what weekly time frame is telling us here, so that we can trade according to that perspective. According to that FTA. Let me go to weekly time frame before your time frame to see what the weekly time frame is telling me. Yeah, something very good. We see the area on the zone that we mark as the conflict zone in the weekly time frame, it is a very real structure. So even weekly time frame supporting our buyers, we have to come inside this area, inside this camouflage area for one month, and to see any reaction of the market. So it means that now our general buyers in EURUSD is just it is an evolution trend, but we have to sell up to this buying liquidity, up to this buying liquidity. So as we see also, as we did in from a monthly time frame to weekly time frame, we saw there is a very big distance from the point that the market is up to the point of the great area. So there is any possibility of the market just to reject our buyers, because as the middle time frame always, or FTA time frame always are more powerful than the coordination. So here we will go first, and before going to 4-hour time frame, we will go to daily time frame to see what the time frame also is telling us. Because if there is any structure here, just opposing this movement of coming here down, it means the market has also highest probability of coming here and giving us a reaction. Then it will go to reclaim trend up to where? Up to this monthly liquidity area. So let's go to the time frame to see or to look what the time frame is telling us also. Yeah, something very good. In the day time frame, we say we have this break of market structure that happened right here. Let me mark it. What is. After having a BOS, let me ask you a question here first. Do you hear me? First, do you hear me?
Yes, we hear you.
Try to mark a shift. Where shift happened here?
Shift. Okay. Wait.
Oh, where is the validation point? This one.
Yes.
Another one. Another one. Anyone? Okay, let me proceed. We want to say that this is an invalidation point. We want to say this is validation point because here we see another swing point or another formation that is body closure is above the previous formation here, as you can see. So we will mark, of course, this as a break of market structure, but its invalidation won't be this validation, or really validation is this candle here. In case, if this weak rejection of this structure didn't close this structure, we will consider this as what? As invalidation. But as long as the weak rejection of this structure here closing or broken out, we will consider this as an invalidation because also the body close of this is above this previous body closure. I think we have to get out to that point.
We are together.
Okay, so I think that is a mistake that a lot of you are doing in this chart. So in EURUSD, the market is performing a transition right here, or it gives us a shift without any formation, neither inside formation or outside what? Outside information. So what you're waiting for EURUSD this day is just we are waiting the EURUSD as it already shifting here. We are waiting an outside formation in EURUSD. So we will trade the EURUSD, I think tomorrow after this body closure to see if this body closure is closing below this week rejection, then we will find any shift here below to trade to buy up to this zone, then we will sell it up to this area of repeat here down. But if this candle won't close below this formation or below this week rejection, it means that we will go to H1 time frame to find any shift that we can take it to buy up to the previous what? Up to the previous high at this point. I think you are together at that point.
Yes, we are together.
So let's be very patient to wait about the closure of this vote of this diversity. I think that's all. You can use the same analysis in the XY index the same. So if we get a selling entry tomorrow, it means that we will buy the XY. And if the selling entry violated, it means that we will find a buying opportunity in EURUSD and a selling opportunity in the XY index. That is my idea. Let's be very patient to look the reaction of the market here. The good setup, the good entry, we will get it tomorrow, not today. But for the scalpers, be free. Take any reaction that market in here. I think you are together, guys.
Yes, we are together. What about GPB USD?
The PUSD,
Yes.
USD.
GU.
In EURUSD, as usual, we saw the market performing a shift right here. They gave us this shifting, and then it offered us this inside formation. And good enough, the market is already tapping this inside formation. But something I want to warn you, I give you a very second thing in a forex, and I decided to teach all of my students, but no problem. If you see the market is creating higher high, higher low, it means that I call. Sorry, let me put it. You have high, low, high. It means that according to the theory of market structure, we want to see this market is coming inside this area of people to take a equity, is it?
Yes, yes.
But for the market to come here, we must observe a shift in a coordinated time frame here. So there is a very big mistake that a lot of people are doing. Whenever they see a market is shifting here, they just trying to find the formation and they come to sell here. But if it's not the market is going to what? They wash the thing out. Why the market did this? In order for the market to take any shift, we must meet either area of interest or area of consideration. Okay?
Yes.
Let's assume the market is tapping area of interest. Tapping area of interest is not enough to make a confirmation that that shift will be valid. After tapping the area of interest, also we need to see the market is consuming or is tapping also a point of interest. Or in case if the market is tapping or reaching the area of consideration, we need also to see the market is tapping also a point of consideration. At that point, we will say that our shift is our shift has the highest probability of winning. But if it's the market performing a shift, then in the left side there is no any area of interest or area of consideration, or even though tapping area of interest, but it's not yet tapping the point of interest. That shift is always a scam. To say an example, you see the market getting higher, high, higher, low, and here left side you see any point of interest, and the market. Sorry, wait, this. You see any point of interest, and the market just tapping that area of interest. First of all, don't be satisfying with market tapping this area. Go to the lower time frame again to see any point of interest or point of consideration that the market will come to react at that point, and then we establish a retracement move or liquidation move. So here we see the market is tapping this area as our area of interest, but tapping this area is not enough for us to take a straight trade here. We must also see the market is tapping a point of interest. So what is the point of interest? Or area of interest? The people who subscribing my mentorship, I think they will come to know all of them. So here, as we see the market, when reaching this point, it's trying to sell little. I think this was a retracement selling. After that, taking buying trade, and they coming to this previous swing point. After coming to the previous swing point, it didn't close it. Just it exactly as we see. For the people also who will start in my mentorship in entry level 2, we will see how to take this kind of entry here. I think also we have to get up to that point. But let me give you a signal here. Go to the time frame. If you see the market performing a shift in the time frame, that is the indication of the market reversal in this time frame. Or if the market didn't perform on a shift, then there is any formation here below. The market will come and touch formation, then go to the another lower time frame to see if the market will performing a shift. Then you will take a buy trade up to this previous point. or if you know the concept of area of interest plus point of interest, you will come to find any possible point of interest here. Then you will see if the market is tapping. If it's not yet tapping, you will find any buying opportunity to support a market up to that point of interest. Are we together?
Yes, we are together.
Okay, thank you. That was my idea. I wish you all the best in your travel. Goodbye.
Okay, have a nice day.
Thank you. You too.